In this video, I'm going to explain you USD INR. Is INR falling or is USD rising? Open Twitter, open YouTube. Everybody is screaming the same thing. INR is collapsing. Government failed. Let me ask you one simple question. When USD INR moves, which currency is actually moving? Is INR really weak or is the US dollar just unusually strong? If you understand this difference, I promise you will never panic over the currency headlines again. Let's say USD INR moves from 85 to 90. Immediately, every news channel shouts. Social media panics. Everybody looks for someone to blame. But here's the first mistake people make. USD INR, it's a pair. It's not just INR. Think of it like a tug of war. If one side suddenly becomes very powerful, the rope moves, even if the other side hasn't changed much. So, blaming only India is like watching a boxing match and blaming the loser without checking how strong the opponent was. To understand this, let's start with the bigger force, the US dollar. Over the last 2 years, the US faced very high inflation. To control it, the US Federal Reserve raised interest rates aggressively. You may ask me, what happens if the interest rates are high? I'll tell you. US bonds, they give better returns. They are safe compared to other risky countries. Global money starts flowing into the US. So investors worldwide, they would prefer selling yen, euro, and other emerging market currencies and buy US dollar. That is why, if you look at it, Japanese yen crashed, euro weakened, Korean won fell. Almost every emerging market currency struggled. So, pause and think for a second. If every currency is weakening against US dollar, is this really an India problem? Or is this a global USD cycle? Here comes the most important update, and this is where most people miss the plot. Recently, US inflation data, which is the CPI, came in lower than expected. Lower inflation means the Fed doesn't need to stay aggressive. Interest rates don't need to stay high forever. And markets don't wait for reality. They react to expectations. When markets are expecting a rate cut, US bonds become less attractive. Money stops chasing US dollar. USD strength starts cooling off. This is why you will often see stocks rising, gold stabilizing, and US dollar losing momentum. So remember this simple rule. Good inflation news, it's bad for US dollar. Currencies, they move in cycles. The US dollar doesn't stay strong forever. Now, let's look at the INR side, and this is the reality, not just emotions. Let's honestly talk about India. India, as you all know, has structural realities. We import oil, we need dollars, we run a trade deficit, and these are not new problems. They've existed for decades. But India also has some serious strengths, strong GDP growth compared to most countries, large forex reserves, an active and experienced central bank. And this brings us to a concept most people don't understand. We follow managed depreciation. I'll tell you what, RBI does not want the INR at 60 because the exports are going to suffer. And if INR comes crashing suddenly, inflation will explode in the country. So what does RBI do? RBI, it allows a slow, controlled and predictable movement. This is not a weakness, this is a policy. Most people just look at the absolute numbers. INR is at 89, 90. Oh my god, disaster. But it is not about that. Compare INR with yen, euro, and many other emerging market currencies. INR has actually been more stable, less volatile, and better managed. So the right question is not why is INR weak? The right question is was USD unusually strong? And for the last 2 years, the answer has clearly been yes. Now that we've discussed everything, you must be wondering what's going to happen next, right? I will tell you. If US inflation keeps cooling off, there could be a possibility that further rate cuts could come, and then USD strength will eventually fade. If that happens, pressure on the INR reduces. USD INR, it will stabilize, or even better, it might actually reverse. Same India, different global environment. To actually summarize everything that we spoke, recent USD INR movement is roughly about 70% global USD strength and 30% domestic factors. Blaming 100% on the government, it's not analysis, it's just noise. If this video helped you to think clearly and understand the concept, please do like, subscribe and share it with someone who needs to hear this. Thank you.